Good morning and thanks so much for joining in. You're watching NDTV Profit. My name is Alex Mathew and this is all you need to know. Like the name suggests, over the next half an hour, we'll tell you everything that you need to know to start your day on the right note. Let's start with the headlines. The US Fed sees rates staying high for some time with cuts expected or eyed later in the year. The Fed minutes released yesterday feed higher for longer expectations, and the Federal Reserve Bank of Richmond Thomas Burman says that soft landing looks more likely but not inevitable. US bond yields spike, rise to close to 4% before losing ground. US markets tumble as the benchmark indices all lose ground for a second day in a row. Oil prices rise as crisis deepens in the Middle East after 100 people were killed in a blast near Soleimani's tomb in Iran. Houthis attack another ship in the Red Sea. The Burman family calls for a probe over ESOPs to Relige's Rashmi Saluja, alleges that around 8% of the company's equity was allotted to Saluja without approval and requisite disclosure to parent Relige Enterprises shareholders. And Bajaj Auto will consider a buyback proposal next week. The stock rises almost 5%. Now, the talk of the street today has to be the Fed minutes that was released yesterday. They indicate that the rates will stay high for some time, with cuts eyed later in the year. Separately, Federal Reserve Bank of Richmond's Thomas Burman said that a soft landing for the US economy looks more likely, but hardly certain. That pushes back on expectations of multiple rate cuts by the Fed this year. What's more, the Fed minutes also indicated increased optimism among participants about the path of inflation, noting clear progress. The committee expressed a willingness to cut the benchmark lending rates in 2024 should the trend continue. Though they gave no indication that easing could begin as soon as March. And bond yields, of course, were volatile in trade yesterday. They rose to a high of nearly 4% before dropping and settling around that 3.93% mark. U.S. equity markets fell for a second straight day. The S&P 500 and the Dow Jones Industrial Average dropping about 0.8%, and the Nasdaq Composite dropping over 1%. Now, in other news, Mark Zuckerberg sold nearly $500 million of Meta stock in the last couple of months of 2023. He offloaded shares on every trading day between the 1st of November and the end of the year, selling nearly 1.28 million shares for about $428 million. The Meta chief has not sold any shares since November of 2021 before this round of selling. And finally, oil has risen for a second day following supply disruptions in Libya, while another attack on a container ship by Houthis in the Red Sea and blasts in Iran, as we've already pointed out, increased tensions in the Middle East. Brent was at over $78.5 to the barrel last I checked. All right, now we're joined this morning by Fook Hien, the senior investment strategist at Standard Chartered Bank. Thank you so much for joining us this morning. Overnight, we've seen bond yields spike and we've seen the Fed minutes come out. Can you tell us why there is so much volatility in the bond yields, and what would you take from that? What does it mean for risk assets?
Yeah, thanks very much. I'm very happy to be here. So, I mean, bond yields have been a big driver for the market. We've seen that last year. There's been a lot of worries about inflation and whether they'll be controlled or not. So we think the market will continue to be volatile. But our view for this year really is that inflation will be able to come down and it will be controlled. And this will actually pave the way for the Fed in order to cut interest rates at the second half of the year. So for the first half of the year, I think we're looking at the momentum continuing for the economy, and the yields have been coming down. But we do expect that as inflation comes down for the rest of the year, that the Fed will be able to then cut interest rates towards the back half of the year and be able to support the economy as more signs of weakness come through. So I think the Fed is in a difficult position. In December, they surprised with a bit more of a dovish stance, pointing at 3 rate cuts this year compared to where the market was expecting. So I think it was now they have to drive a fine balance in terms of keeping the view that interest rates will be finely balanced in order to support the economy. And so our view is that the Fed will be cutting rates towards the back half of the year, and they'll be supportive for the economy.
I was reading a recent report that states, and this is JP Morgan's latest Treasury client survey, which showed the biggest net drop in long positions in bonds since May of 2020. And that's led by both a reduction in longs and new short bets. I'm just trying to understand the direction that bond yields will take right now. And we're watching this very closely from India because invariably this affects risk assets in emerging markets as well. How are you reading that?
Yeah, you're right. I think the question of yields is that it drives a lot of things. It will drive FX as well, which will then impact the emerging markets especially. So I think there's a lot of focus around it. I think the yields and the expectations about it move around quite a lot. As you said, it moved last night over 4%, and then it's dropped down below. I mean, our view is that over 12 months, it can slowly migrate down towards 3.5%. Now, a lot of this is predicated on inflation coming under control. Our science is that inflation will come down. The core inflation, the services element, a lot of it is supported by shelter or your housing and rental equivalents. We think there are signs there already in place that shows that the inflation there will come down and will come down. But bear in mind as well, history suggests, especially in the 80s, that when inflation tends to be high, it is very difficult for it to come under control. It can be very volatile when it is high. And therefore, the Fed, they're looking at history as well, and they are aware that, you cannot be complacent at all. You've got to be very, very careful about inflation. Therefore, they're also sending the message that, rates will be high in order to control inflation. So we think the messaging is consistent. They are very, very careful. But our view is that at the end of the day, there are signs that inflation will come down. And as that comes down, historically, it suggests that the rates will be able to come down and the yields will come down as well following that.
Last question, Fook. And, I was looking at some of your interviews last year as well, and you had initially thought that there would be a recession in the first quarter. And I think a lot of people thought that at the time, but that seems to have gotten pushed forward. In fact, some Fed officials are also talking about the possibility now increasingly of a soft landing. It's not inevitable, they say, but it's possible. What are your expectations, bearing in mind everything that you know now?
Yeah, thanks for that. I mean, this is true that we did have a view that a recession would be coming, but then like much of the street, I think we've been proven wrong. So our view at the moment is that we think the base case, our view is that they will have a soft landing. What does a soft landing mean? We think that for the majority of the year, growth will be below trend, but positive in the US. So that's our view of a soft landing. And in terms of a recession coming in, we think we're okay for the first half of this year. But a lot of indicators, your traditional indicators of recession, like your inverted yield curve, that remains in place. So we're very cautious as well about whether a recession could come in the second half of the year. But for the first half of the year, we're positive about risk assets. Now, in terms of a recession coming on in the later part of the year, we think we'd be cautious, we'll be watching the signs about that. And our view really is about the 30% probability that you could have a recession or a hard landing coming in the second half of the year.
Thanks so much, Fook, for joining in and for sharing your views this morning. Let's turn to the Indian equity markets then and get you the latest cues in the F&O space. And remember, this is, of course, weekly expiry, so brace for a little bit of volatility. Seems to be inching up. Agam is going to tell you more about that. Agam, morning. Well, we saw what was expected yesterday in terms of a bit of a drop. And you've said all of this week consolidation seems to be at play. What can you take from the F&O cues?
Right, Alex, on the face of it, it does look like the indices closed largely flattish yesterday, save for something like the bank Nifty. But the truth is that it was a rather volatile day of trade yesterday. So while we began the day with a lot of weakness, we had the Adani Hindenburg outcome, and because of that, we saw the markets race forward. And once again, we saw a little bit of moderation in prices. The question really is that are we expecting some relatively sharp moves coming through in a range today as well. That's something that we will know eventually down the line. But for now, of course, the Nifty eventually closed with cuts of around 0.7%. And there was no change in open interest because a lot of traders, well, perhaps would want to sit on the sidelines because of the uncertainty that came through on account of several factors yesterday. In terms of the Bank Nifty too, well, we did have a lot more unwinding coming through. And this is a follow-up unwinding that we've seen for the second straight day. This time, the open interest declined by another 12.5%, even as the underlying remained largely flattish, marginally in the red. Today is the weekly options expiry for the Nifty, and we are going to keep an eye on the levels around 21,400 on the lower end. Of course, this is as far as the change is concerned, considering we saw weakness on the Nifty. We started seeing a little more writing around 21,800, 21,700, considering we closed much below those levels. And those levels perhaps will also offer a little bit of resistance in today's day of trade. So let's pull up your open interest distribution for the Nifty. And as you can see, it's largely calls that where we are seeing a substantial amount of open interest distribution around starting from 21,600, 21,700. Those are the levels around which we will see a little bit more resistance, at least in today's day of trade, considering today's options expiry. On the lower end, we don't see too much traction with respect to puts. And mind you, we closed at around 21,500 yesterday. Should we see the Nifty open considerably lower, well, there is a chance that it could lead to a little more weakness because we start seeing unwinding around 21,500, 21,400, longs unwinding specifically, and that could perhaps create a little more volatility and a little more weakness, at least in the first half of the session. But that's something that we will be watching out for. Let's talk about stocks then. And, well, it was a mixed market yesterday, but we did see a lot of longs building up. As far as your futures and options space is concerned, Alchem Labs, Bajaj Auto, Crompton Greaves and Concor. Bajaj Auto on focus, of course, after the board has said that they are going to consider buyback on the 8th of Jan. And in terms of stocks, we saw unwinding as well. We saw a lot of stocks being covered in terms of shorts. Coromandel, PVR, Inox, ITC, along with ONGC. SAIL was the only one which saw longs unwinding. So it was a mixed day of trade. The question today is, where do we see the Nifty expiry considering the weekly options?
Thanks so much, Agam, for that. Let's focus in on corporate news then. The Burman family, owners of Dabur India, have called for a probe into the allotment of shares of Religare Finvest to Rashmi Saluja through employee stock ownership plans. And it's a quite considerable amount of shares that we're talking about here. Sajid Manghat is joining in with more on that story. Sajid, what's the context here and what's this latest development?
Well, the context for this entire corporate control battle which is happening between the Burman family and the board of Religare Enterprises led by the chairperson Rashmi Saluja is basically, Burmans want a control because they have already offered, put out an open offer for Religare Enterprises, and at this point in time, it seems the resistance is coming from the board of directors, including the independent directors and the chairperson coming there. In the fresh allegations which were leveled by the Burman family, they have alleged that ESOPs of nearly 2.15 crore ESOPs were granted to Rashmi Saluja, and it was done without the nod or information to the shareholders of Reliance Enterprises, Religare Enterprises, which is the parent of Religare Finvest, which is the NBFC arm of Religare Enterprises there. Now, they claim that these ESOPs account for nearly 8% equity in the NBFC arm and gives Rashmi Saluja a big equity stake in that arm, and that's what the Burman family is objecting to. In the response, the board of directors of Religare have basically said that AGM notice was sent to the BSE on September 1st to 2023, and the AGM happened on September of 26, where the grant of options were permitted, or the shareholders approved the grant. The shareholder in this case is mainly the parent here in the case of Religare Fininvest, and that they have granted the permission to grant 2.15 crore ESOPs to Rashmi Saluja. Now, they've also made it clear that these grants, though have been confirmed by the shareholders, they have not been brought in front of the NRC, which is a Nomination and Remuneration Committee of Religare Enterprises, and hence no fresh shares have been issued to Rashmi Saluja, and so there is no violation of takeover code regulations as alleged by the Burman family. To be clear here, while the board has said that intimation was sent to BSE on September 1st, on the BSE website it's not available, and so I think that's where the allegation is coming from.
Thanks so much, Sajid, for laying that out for us. Let's shift focus to the telecom space, where the Telecom Regulatory Authority of India has set out the latest data, and Bharti Airtel as well as Jio continue to consolidate their position at the top. We've got Smriti joining in to give you some perspective on the latest numbers. Smriti, what can you tell us? Morning.
Good morning, Alex. You rightly mentioned that Bharti and Jio continue to gain. However, this month, as in like the October month that the data came out yesterday, Bharti saw a substantial fall in net additions. To be precise, a 73% fall. So that means that it only added 3.5 lakh subscribers in October as compared to 13 lakh in the previous month, which was September. On the other hand, Jio continued to gain, but slightly at a slower pace. It gained 31 lakh subscribers in October compared to 34.75 in September. Now, while we look at individual subscribers, it's also important to look at the consolidated figure. In October, the consolidated addition slowed down substantially, to be precise, 48%. So it came down to only 8.3 lakh additions in the wireless space as compared to nearly 17 lakh in September. So that's probably why we're seeing this anomaly in Bharti Airtel's numbers. However, let's take a look at Vodafone Idea and BSNL as well. They continue to lose subscribers, no surprises there. Vodafone Idea lost about 20 lakh subscribers in October as compared to 23 lakh in September. Same BSNL. With BSNL, though, it only lost 6.3 lakh subscribers in October as compared to 23 lakh in September. So that's pretty much the picture there of wireless additions and Vodafone Idea and BSNL losing subscribers.
Right. Thanks so much, Smriti, for laying that out. And in fact, clearly stocks to watch out for in trade today. We have to slip into a very quick break on this program. Do stay tuned. There's more on the other side. Welcome back. You're watching All You Need to Know. It's time to look at the stocks that you should focus on in trade today. And Anushi is joining in with the initial list. Morning, Anushi. What's on your list today?
Morning, Alex. So I bring to you 3 stocks. I'll start off with Power Finance. First, Power Finance Corporation has signed a MOU worth rupees 25,000 crore with the Gujarat government. So this is in context with the PFC will provide financial backing for the generation, transmission and distribution projects in the state. Along with this, the collaboration will also also facilitate long-term debt and other critical funding necessities. So with this alliance, it is creating about 10,000 employment opportunities in Gujarat itself. Now, while if you just look at the stock performance of the company, it was one of the biggest multi-baggers in the mid-cap space with about more than about 200% gain in just 1 year, and about 2% stock is up in the last 5 trading sessions. Now, the second stock is Adani Ports, wherein the company has approved a fundraise of up to rupees 5,000 crore via bonds. So this is just on this, another company that is also looking for fundraising is Satin Credit Care, which will consider fundraise on Jan 8. But coming back to Adani Ports, the fundraising was one of the topics. Another is the management update that the company has come out with, wherein Mr. Gautam Adani has been redesignated as the executive chairman up to July 30, 2027, while Karan Adani has taken over as the managing director now up to May 23 of 2027. Other important management updates is appointment of Ashwani Gupta. Now coming to now the third stock is Chambal Fertilizers and Chemicals, which is considering a buyback on Jan 8th. So if you just look at the balance sheet, the cash position is about 525 crore, while the 10% of net worth is about 763 crore, while the 25% net worth is about 1,900 crores. So those are the 3 stocks you should be watching out for today.
All right, thanks so much, Anushi. In fact, there are more stocks to talk about, and Harsh is joining with the next list that you should watch out for. Harsh, morning. What do you have on your list?
Well, yes, Alex, a couple of banks. We have the likes of Ujjivan Small coming out with their quarterly business update. We have advances growing at 27%, deposits at 29%. Again, one of the few banks where deposits have outstripped advances, and loan-to-deposit ratio seems to have improved there. But CASA ratio has come off along expected lines, and we've seen disbursements go up by 17% year over year. Quickly moving on to IndusInd, deposit growth at 13%, advances growth at 20%, a wee bit lower than what most market analysts were penciling in, but nonetheless in line with their guidance. And loan-to-deposit ratio has gone up to 88.5+% now. So an eye out on those LDR ratios as well. Quickly moving on to IEX and Vedanta, both having good updates. You're seeing IEX volume growth 17%, overall volume up 15% year over year for the month of December, and total electricity volume also up roughly 9%. So IEX will be in focus on the back of that. Vedanta, we saw aluminium output go up by 6%, but we saw zinc output come down by 4%, that's a negative, and oil and gas also come down by 15% year over year. The main piece here is that Vedanta has announced consent solicitation across various bonds maturing in 2024, 25 and 26. This is big because, of course, some of those bond restructuring, debt restructuring, which Vedanta has been working on, seems to be, they seem to be closing in on that restructuring. So Vedanta will also hold the key. Of course, need to wait and watch as to how the stock reacts. Also, a 3,400 crore NCD raise approved by Vedanta as well. So Vedanta largely in focus because funding seems to be, which has been an overhang, seems to be going away.
All right, thanks so much, Harsh, for bringing us those details. Now, the Supreme Court has given its judgment in the Adani Hindenburg case and dismissed all allegations against the Adani Group. The Apex Court ruled that petitioners could not provide enough material to transfer or to justify a transfer of the case to a special investigation team or, in fact, the CBI. The team at NDTV spoke to Harish Salve, Vinayak Chatterjee, and Ryan Karanjawala, and here's their view on the latest developments.
Today's judgment is more than just a vindication of Adani or a vindication of India Inc. as such. It restores the supremacy of 2 important principles: the rule of law and the separation of powers. Under the rule of law, unsubstantiated allegations, bazaar gossip, media speculation are all inputs for regulators and investigating agencies. They are not evidence on which courts can act. Statutory authorities, statutory regulators, investigating agencies must be left free to act, free from intervention by the highest court.
There were, as far as SEBI was concerned, 4 investigations against the Adani Group, out of which today 22 are completed, and the Adani Group has succeeded in those investigations. SEBI itself, at the end of those investigations, came to the following conclusions. And this has really nothing to do with what is reported in newspapers and otherwise. So the conclusion is dehorsed that. The conclusion was, and is very clear, one, that the Adani Group did, as far as SEBI is concerned, one, that the Adani Group did not violate, and no law was violated in the rise of the share prices of the Adani Group. 2, as far as the Adani Group was concerned, no investment laws were violated. 3, as far as the Adani Group is concerned, the requisite information that they gave was adequate and accurate. And 4, again, as far as the Adani Group was concerned, they did not violate the minimum public shareholding which was required.
The court very clearly says that it does not want to step into a legitimate jurisdiction of a technical regulator, which in this case is SEBI. And this has come again and again, where if you remember, in the imported coal case with ultra mega power plants, the Supreme Court had sent the matter back to the power sector regulator, saying these are technical issues and the Supreme Court should not step into the jurisdiction of an independent regulator. In this case, it happens to be SEBI, unless, and it's an important point the Supreme Court makes, unless the petitioners are able to prove that it violates fundamental rights or any provisions of the Constitution. So therefore, in this case, the Supreme Court is not satisfied that that there are any issues of violation of fundamental rights or constitutional invalidities.
All right, and you can catch more details of that on the website ndtvprofit.com. That brings us to the end of this particular edition of All You Need to Know. There's lots more lined up on the program, though, on this channel, though. Do stay tuned. This is NDTV Profit.